All right, welcome everyone. Oh, hey Jason. My name's Mark Weinstein. I'm a principal at Wavemaker Genesis Fund. We invest in early stage crypto projects. Here to talk to you with these fine gentlemen about mainstream adoption of blockchain and what it's going to take for us to get there. So first, I just want everyone to give a quick introduction, keep it relatively brief. I know we all have interesting things we're working on, but we have a lot to talk about today.
Brief? I'm never brief. Randall Crowder, COO of Funware. Probably the best thing to know about us is I think we're probably going to go down in history as the first company to be glutton for punishment and file a registration statement to list on a public stock exchange, NASDAQ, while simultaneously launching a coin offering, FunCoin. And FunCoin, in a nutshell, we're tokenizing one of the most valuable assets on the planet, your data.
Hi, my name is John Paukalis. I am the CEO, founder of Gifts with a Z. We are a wallet with liquid rewards, so we can finally trade our Target coins for our Singapore Airlines coins. In a previous life, I was head of Paramount Pictures marketing and did production campaigns for Titanic, Mission Impossible, Star Trek, and now I'm in the blockchain world.
Hey everyone, my name is Shiv Madan. I'm the CEO of Block Party. We're an event ticketing blockchain. I came from the festival world, and before that, banking.
What was it? Yeah. You got your own theme music. I like that. Now you're just showing off.
Perfect timing.
We had a.
That wasn't planned, I don't think.
So we launched and have been ticketing music festivals. The intent is to combine NFTs with fungible assets and essentially create marketplaces for any complex asset. But we're starting with ticketing.
Hi, my name is John Souza. I am the CEO and founder of Kingsland University School of Blockchain. We're a full cycles and full circle solution that provides training, placement, outstaffing for blockchain developers. We also incubate and accelerate entrepreneurial developers underneath our wings.
Hi, I'm Christopher Smith with Rootmont Research. We do deep quantitative analysis on over 400 cryptocurrencies in the secondary markets. And I've been on the tech side of cryptocurrency for many years now and just became obsessed with it.
Great, thank you guys. So obviously a lot of brain power on this panel. I'm super excited to dive in. So we're talking about mass adoption right now, and I want to start by asking, kind of taking an assessment of where we are today and identifying what it is that we're missing in the blockchain ecosystem that will help drive mass user adoption.
I'll jump in. I think it probably was maybe a month or two ago, but the Imperial College of London put out a report kind of what it's going to take to drive mainstream adoption of crypto. And they kind of listed three components. One was a store of value, one was a medium of exchange, and the other was a unit of an account. And like those three things for me are very kind of technology centric, and like coming as 10 years as a VC where it's all about kind of market size and how do you get your product or your solution into the hands of users, I kind of have a different lens on a lot of this. And so I feel like those things are very engineering centric. You can have all that and it can never see the light of day. And so for me, there's kind of two more components that we really focus on for FunCoin. One's awareness, how do you get it, how do you educate your user base? And then it's distribution, how do you get it into the hands of your users? And I think a lot of people, I cringe when I hear crypto project. What's a project? You're an investor. I don't invest in projects. I invest in companies backed by people. And if you have just a project and a white paper, you're not thinking about awareness and distribution and strategy and how you're going to partner with the right folks and how you're going to get it into the hands of people, because you can have the best product in the world and no one knows about it. So awareness and distribution are two things I think we're missing.
Yeah, the word project does make it sound a little bit like a high school assignment.
No thanks.
Yeah, so we're moving towards businesses, I think.
Correct.
Great.
So where we're at, I think, is much like when broadcast cameras first came into play, and there were no television sets yet, and broadcast TV would use existing businesses, which was the theater. So you'd shoot the theater, and then you'd broadcast it to the 2 or 3 television sets that were out there. We're taking existing businesses and moving it to the blockchain. I want to look beyond where the broadcast camera becomes what we have today in television.
I mean, I've sort of came through the last, internet bubble and bust, and now looking at the companies who are dominating in technology now, and I see that it started around 96 to 97 when you had people moving from mail clients like Eudora to Hotmail. And why did Hotmail become the turning point for that mass adoption scale leading up to 2000? And I think it was really simple, but it was a product that was really sticky. That little line at the bottom, get your Hotmail. It was obviously the technology was extremely solid, and then you had the marketing that was that was behind it as well. And I think if you have those three things, we're going to be able to move in the same kind of trajectory as what we had in that era, but using things like, obviously that was the internet information, and then you've got the store of value that we're trying to transact now. So I think it's how do we do the same thing with value?
I think that there's a major issue that no one wants to talk about, and there's a little dirty little secret in the entire ecosystem, is that there are no blockchain developers. So we sat here, we raised over $10 billion this year. Speak to any company out there and ask them, do you have blockchain developers, or how many are you looking to hire? No one can fill their hiring needs. So you have the number one risk to the entire ecosystem is the fact that there's not developers out there. There's not standardization, there's not certifications. How do you train these guys? Do they come out of magical thin air? So, our company, we surveyed Fortune 500 companies. So 200 companies turned in their surveys. 188 said that they plan to initiate blockchain initiatives over the next year. 12 said they can identify the workforce designed to do that. Now that's a major, major problem in the ecosystem, because at the end of the day, we have an ecosystem built on toothpicks. You can't build on toothpicks. It doesn't work out that well. So what our company is, for the trading side, we're trying to secure the future of blockchain to make these companies, these projects actually turn into companies and turn them into real things versus talking about it. Because if you look at on the ICO side of it, 40% of the ICO proceeds, you look at use of proceeds, about 40% of all the assets ICOs are raising, they're saying they're doing it for human resource capital needs. Well, if you can't hire developers, what are you doing with the money?
Lambo.
And that's the problem, your fiduciary responsibility issues. So we need to really look amongst ourselves, and I candidly wish that we weren't talking about crypto anymore, we were talking about blockchain. I wish this was Blockchain Invest Summit versus Crypto Invest Summit, and we had a paradigm shift in the kind of the wording and the phrasing that we use in the ecosystem, because if you want enterprise to come in, that's what has to be done.
Just on that point, I mean, I'm sorry to jump in, but
No, it's okay.
I know there's a crypto versus blockchain that tends to permeate, this room and the market in general. But fundamentally, different things. I mean, you've got blockchain, which is the underlying tech, but crypto is the incentive mechanism that makes it all gel together and work.
Right.
I mean, if you say, okay, there's IBM building blockchains, and there's no incentive mechanism, they're working together because their incentive is to do business. So for logistics, there's a oil company and there's a producer and there's a logistics company. They have to work together, otherwise the oil doesn't get from A to Z. But for a lot of blockchains, there's no, the incentive mechanism is restrictive. So I think we have to, in some way, shape, or form, create the distinction. And I think the reason why most people are in this room is for crypto. I wouldn't say that it's, hey, it's blockchain. But I mean, I think this is always going to be a debate.
I think when you look at, again, when we're talking about mass adoption, when you do a Google search on crypto, you get a lot of different things that pop up. When you have blockchain, it becomes more enterprise. Again, if we're looking at mass adoption, it starts at enterprise. And how do enterprise learn? I mean, you're dealing with a lot of enterprise companies on your side, and the hedge funds. Is that, again, we're all in a crypto environment, but how does that interrelate to blockchain?
Yeah, and I'm not a marketing expert, but to me, I see a lot of projects, and they're doing something on the blockchain, and the question is always, why do you need a blockchain?
Right.
And crypto is actually the answer to that. Blockchain is fundamentally a cryptographic technology, and cryptography is a munition. It's a weapon. It's subject to export treaties, and that's because it's something you do when you want to hide or secure something against falsification. And so this is, to me, the real, bringing this back to mainstream adoption, finance can be weaponized. I mean, there are people, we're all quite comfortable here, but some people get subject to, serious issues in their life, right? And you just look at Venezuela, what's going on right now. And so to me, I think that what's going to bring mass adoption is a lot of people are going to go through a crisis that this weapon solves. And that's going to wake up the rest of the world, because that crisis doesn't just happen to one country. It might happen to 1 or 2 countries at a time, but it's an incentive issue with the structure of our financial system.
But consumers don't care about crypto. They don't even care about money. They care about what money gets them.
Exactly.
That's true.
It's the value of something. So I believe the future is value-backed tokens. That's my belief.
Well, I think people talk about, intrinsic value, and I think that this is, a little bit of a mistake. Something's only worth what someone else is willing to give you for it. And, and you can't eat crypto tokens, right? You can't eat dollars, or at least you shouldn't.
I have.
What? But, so at the end of the day, it comes down to other people doing things for you. And that's what money facilitates, is this sort of self-assembling organization.
One comment I'm bringing back to you,
Yeah,
Mark.
of course.
But so I agree totally on the developer side. We need, way more developers. But when it comes to like mainstream adoption, I like people to kind of consider, what are you building? How do you not get so, obsessed with your own technology that, we just have tens of thousands of companies all developing their own blockchain and nothing has any critical mass. I like companies like, Lisk, where they're trying to say, okay, how do we make this simple for people to build real-world experiences, real-world use cases, using blockchain, but not having to create entirely new code, entirely new blockchains. Hey, everybody knows JavaScript. Let's use that. Yes. And then let's see how we can integrate that into an existing platform so that I don't have to overwhelm you with how smart I am, and you have to learn how to code my specific language and build on my blockchain. As a business use case, thinking about, we did $15 million last quarter. I used the hell out of Salesforce. I couldn't code it to save my life. So how do you build things that will enable other people to build real-world value that drives mainstream adoption without telling them go to school for 10 years before you even get started?
Yeah, I agree. I think education is important, but at the end of the day, consumers and enterprises gravitate towards something that's convenient. And so I would ask, I open this up to you guys. Do you think that enterprises or consumers care about crypto versus blockchain? We care. Right, but do they care?
I would say, so we work with Fortune 500 brands, and almost every one of them has a very good understanding of what their profitable behaviors are. And so as we talk to them about kind of Funcoin enabling, their ecosystems, they like the optimization of it, the efficiencies of it. John knows about this as well. If you have any kind of crypto-enabled loyalty rewards program, you're shifting custodianship over to the user. So now you don't have massive amounts of liability sitting on the books of, especially a public company, throwing off your ratios. But even a private company, people are selling those for 10 cents on the dollar just to get them off their books. They don't care really what the technology is. They care about performance and financials and what are their customers going to get, and does a crypto-enabled ecosystem drive a profitable behavior that adds to their, hopefully their bottom line. And so, not getting so obsessed and lost with the technology. We met with, one of the world's largest cruise lines, and, technology is cool. What does it do for me? How is it going to make my shareholders, value? How is it going to help my employees do their job better? How is it going to delight my customers? Right. And that's what you have to remember.
We own our rewards. 1968 S&H green stamps against FTC. Superior Court ruling was that your rewards, you own them. They try to stop you from having exchanges, trading them, so you wouldn't gather up all your stamps and be able to buy something together. So I see tokenization of value, same thing as an S&H green stamp, or even, for McDonald's had a monopoly, I think Ralph's had a monopoly game where you collect the pieces. People want to collect these things, and it has value. So I see the future as being able to trade value, because once you are an issue, or the actual cryptographic token can move off of your balance sheet into the user's wallet. They own it. You can own your rewards easily instead of having to go ask Singapore Airlines to let you trade. You can go to sellmymiles.com and sell your miles right now. People don't know that.
So I want to ask a question about the markets, because I think a lot of people here think about that, and many of you are just building. But what effect do you think the kind of the frenzy ICO phase and then the subsequent decline in prices has had on mainstream adoption?
I won't jump in this time.
You guys.
Let me get started. Chris.
Well, I mean, some people say that cryptocurrencies don't have any fundamentals, and I disagree. I think the fundamentals are really about the usage, but everything above that is all this speculation, and the speculation is really a zero-sum game. I mean, ultimately what that big bubble and then crash was a massive transfer of wealth from the people who bought close to the top to the people who bought close to the bottom, and so I think this is sort of a game that some people are really good at, and they run circles around the people who aren't that good at it. But the long term, what it is, it's about, I think, the value investing in the real usage, and so the psychology around it and the marketing is, it's tainted by these stories of someone got rich for no reason and someone lost all their money for no reason, and so I think but part of it is this. I think blockchain technology is really our species' opportunity to really view these sort of incentive engineering and all this, like economic system from a design standpoint, as opposed to just simply consuming it. And so there's a little bit of like step up and take control of your life, and that people are talking about ownership of your tokens. What does ownership mean if somebody can just write something with a pen and take it away from you?
Right.
So it's ultimately a social convention, but so I think there's a real psychological shift that has to happen where we mature.
I mean, I think when you think about September 2017 and the big run up in crypto and then the subsequent drop, I mean, I think we wouldn't have had all the people looking at the industry if we didn't have that run up. I think if there was a steady growth, it would have maybe been half or 2/3 of the number of people. So I think there was an incredible value that was created, not in the speculative value, but I think in terms of eyeballs. I think in terms of bringing eyeballs to the industry and bringing the opportunity for people to explore it, bringing smart people in the room who might have otherwise done AI or been involved in some other aspect of technology, or not even been in tech, stuck with finance or trading. I think there's an intense value that's been created in that respect. I think the subsequent drop is the reality check. It's like, okay, well, there's actually real problems here. There are things that need to be fixed. There's data issues. There's transfer of value issues. There's issues related to scale. I mean, all of those things, and there's issues related to regulation, and all those things need to be solved. And I think that's what 2018 was about, or is about. Is okay. Well, how do we actually make this stuff work? And it's good to have all these smart people in the room, because I think it's fundamentally much more valuable than it was in June.
So Shiv, you just brought up an interesting point. September 2017 brought a lot of eyeballs, and I want to bring it to a related point, which is the eyeballs came, but the users didn't. And so the most used applications in crypto right now, the DAUs are like in the thousands, if they're lucky, and even some of the killer applications that we thought were going to be launched this year. So if the eyeballs came, why didn't the users follow?
I think that's the thing. I mean, I think there's such hubris right now in crypto because we're so immersed in it. I mean, everybody in this audience is so like at the tip of the spear. I mean, we can't have this kind of panel without talking about like crossing the chasm. Like the little tiny little triangle at the very base of the x-axis in innovators, that's where we are. And so that was not a proper crash. I mean, just because people got in December and got their, pardon my French, their ass handed to them over the last 2 quarters, not knowing what they were doing, well, welcome to the game. Next year, you'll know. And as you see these kind of things happen, crypto is there's so much pattern recognition involved in this as you start to get smarter and smarter about things. But I mean, this is probably one of the single greatest innovations to reach the global economy since the Medici's commercialized commercialized double entry accounting. And so we are so early in that kind of evolution of not only educating people, but getting them to adopt it and getting them to use it. And so this isn't a proper crash, unfortunately, not to scare people, but a proper crash is trillions of dollars getting wiped off of a market cap, a couple $100 billion.
I'm going to play devil's advocate here on something you just said. And my devil's advocate hat is going to be Nouriel Roubini. who's been coming up quite a bit in our Twitter sphere. We keep saying we're early. To his point, he likes to make this point that Bitcoin launched in 2008, and it's been 10 years since kind of the first killer application for crypto was launched.
Track the same history for email. I mean, engineers used it long before it ever became commercialized. I mean, and it was like 10 years. Yeah, I mean, so
.com, the bubble was here after the .com bubble burst. That's a trajectory.
2004, you see
Yep.
Google launch AdWords,
Internet
internet
took
became
effect
like
20
something you could
Yes,
put money
one
on.
One point he makes is that there were companies with revenue, real revenue, and millions of users 10 years after the internet was created. So I mean, what's our response to that? as an
You actually
industry?
said it in the earlier question. So RIP ICOs. It's the birth of STOs. And so understanding, unless you just want to wall off the U.S., which I don't understand why anybody would want to do that, and that speaks to your usage. But you're going to have a new framework of people launching real companies, launching compliant cryptocurrencies with real teams that have real experience tied to real business models. And then you're going to see users, because now they already have the scale and the reach. I mean, 1 billion devices touch our platform every month. So when we decide to turn on something that's crypto enabled, I don't have to go try to convince a bunch of people or reach a bunch of people or spend millions of dollars marketing my brand. I've done that for the last 10 years, building a real company. And now we're going to use it to complement our real business model. But along that way, well, to go back to your original question, what can we do now? It's educating the masses. The thing that the crypto sphere has differently than anyone else is an openness that is exciting to me. I mean, Silicon Valley is very cliquey. And it's what did you start, where do you work, how much money do you make, what do you drive? And a lot of really kind of epicenters of finance are the same way. Crypto, you can talk to literally the founders of some of the most pioneering blockchain project, companies or projects on the planet, and they'll talk to you. You can talk to the developers, you can talk to the team. There's this kind of open forum of I want to tell you about why what we're doing is important. So I think it's imperative for all of us, if you want to drive mainstream adoption, you got to welcome first the innovators, then the early adopters, then the mainstream, educate them on it, explain it to them, bring them along. We do that. I mean, it's a plug for the Crypto Watch. Crypto Watch, we are all about kind of explaining what blockchain is, what are the cryptocurrencies being built on blockchain, and how do you kind of protect yourself going forward, both investing or using any of these applications.
I think also to add to that, I mean, for all of us to stay on message is very, very important, because a rising tide lifts all boats. Now you have people like Dr. Doom, that's what they do for a living. I mean, he's been right in 2008. There's a lot of people that called that. I'm a former investment banker. It was not rocket science of why the market imploded. It was pretty damn clear now why the market imploded. So to me, why engage the troll? You don't feed the troll. And to me, to even bring him up in a conversation is unnecessary. I think what's more necessary is all of us to sit here and spread the message of what we're here for, and not do it in a cultish manner, but sit here and say that, as you said, is that this is the best invention in a long, long time. This is probably the internet. But now how do we make this now turn into from a project to actual reality? Right. How do we put standardizations? How do we put certifications? How if somebody needs to grow their company from 5, 10 to 100 developers, where do those resources come from? Who trains them? We have to build that infrastructure. So what we do the top down, which we train the proficient developers to be on blockchain developers, but another major initiative that we have is K-12. We're scholarshiping out millions of dollars through K-12, so we eliminate all socioeconomic barriers to training on a global basis. Because the problem is not going to be how do we train devs to become blockchain devs. It's going to be how do we make sure students that are all over the world get the opportunity for IT training irrespective of their socioeconomic obstacles in front of them. And that's a major, major initiative, so we do top down, bottom up.
Yeah, and I think you're touching on something that really was part of my experience in learning about blockchain technology. It was very challenging for me to put the pieces together and understand why all these different technologies that I didn't really know about were necessary to build the Bitcoin, the first one. And the big barrier for me was that I had never really examined what is money and why does it work. Yeah. And there's really like there's a real dearth of financial education in most parts of the world. I mean, you can even go, you can go to Harvard Business School and work on Wall Street and still not know that quantitative easing is printing money.
Right.
Right? I mean, they don't go out of their way to tell you how this shit works. So
Sounds better, quantitative.
Easy, just let them sleep at night.
We got some
Run the
work for you.
People keep talking about tether. I'm like, do
multivariate.
you understand how the U.S. economy works?
Yeah, the tether's around your neck.
Yeah.
In the end, it's multivariate. I mean, you've got, instead of just having one, when you went through internet, the internet, 1.0, 2.0, I mean, you're just dealing with information. So to bring information online, I mean, that was a much simpler task. And to have people pay subscriptions for that was a lot easier. This is multivariate. You've got, not only information, but you've got money. And then you've got assets eventually. Right. I mean, when you've got that complexity that you're talking about, how do people understand it? I mean, we don't have to understand TCP/IP to really, use the internet, but it seems like, the early adopters, in this room in particular, it's like, okay, we all want to understand how these, multiple variables actually work within the ecosystem. Eventually, to get, actual users on board, we're not dealing with, the understanding layer. It's just, here's a really easy application or user interface. I don't really care. I just want to plug and play, and just, it doesn't matter whether there's crypto or blockchain in the background. It's working.
And the UX for money already exists. You go do something to contribute to somebody else, and then you get money in your account.
Right.
Right. I mean, there's a certain amount. We don't have to reinvent all of this, but I think it's it's just dramatically overcomplicated in some cases.
What I keep hearing a constant theme, and I slightly disagree with most of the panelists right now. Yeah, exactly. I'm being the troll right now. I keep hearing education, education, education. People are inherently lazy. They don't want to spend hours a day reading about money use cases and the financial crisis of 2008. We're talking about mainstream adoption. I'm talking about mom and pop watching the local news. Why do they care?
So
how do we get them into this ecosystem?
The way to get adoption with the mom and pop is to, at least a blockchain or of crypto, is to give it away free and don't change their behavior. They need to be able to do the same thing. So what we're trying to do is to model have the points model where it doesn't matter, earn a Subway token. Nobody cares, you have 5 Subway sandwiches and you get the 6 for free. We start educating them by giving them something they want, and then they'll learn. I mean, it's what happened with the internet too. My parents wouldn't even touch the internet. They thought it was crazy. It's for foot fetishes and music pirates. I remember Napster. I'm old enough to remember when people were downloading files from Napster, and then they said, "Oh, it's going to be $10,000 fine for each file." They threw away their computers. They were so scared. We're kind of in that space right now, if you think about it. There's a fear going on, but eventually this will become an application I think the businesses will learn to use as long as we have programmers. I think the future is business tokens.
What's different this time than the internet? We constantly draw parallels between Internet 1.0 and kind of, crypto or blockchain adoption. Why is it different?
I like it because it's global. I mean, that's why, and that's kind of why I say that there's hubris in thinking that we've even started. I mean, people started thinking, do we hit the Hess curve, last fall, and but then if you extrapolate it out to a multi-trillion-dollar market, I mean, we just have like a very little blip, and then at some point maybe we will actually hit an S curve. But you have the dot-com was largely regionally it was regionally centric. Silicon Valley kind of led that. What did it top out at? 3 trillion, and then 1.5 trillion. It was kind of erased off of that. This is global, and it's largely not based or centered around the U.S. arguably, especially as it comes to mainstream adoption. You look at what Asia's doing. And so I think just the magnitude of what we're seeing for this is going to be exponentially greater than what we saw there. And I love what you said about it's about so much more than just the dissemination of information. It's the dissemination of value, and that could be contracts, it could be data, it could be currency, it could be finance. The sky's the limit, and that's what's exciting. But what John said about the mom and pops, not asking them to change their behavior is such a key point for entrepreneurs really trying to explore how to bring something to the mainstream. I mean, honestly, I like what, you know, Bat's trying to do, but you're asking people to change their behavior. You know, stop using Google, use our brand new browser. That's a huge impediment to mainstream adoption. So as you think about things, how do you let people live their lives and just delight them a little more and make them a little better and a little more enriched without, to your point, making them learn a whole bunch of new steps and tasks?
But when you're dealing with value, ultimately, when you're dealing with value, ultimately, I mean, we started this run up because it was an asset class. You know, in a lot of people's minds, it was on CNBC. There was lots of conversations about, you know, Bloomberg was finally quoting the Bitcoin price. I mean, I don't. You know, everyone's talking about, oh, what's the killer app? I mean, Bitcoin's the killer app. You know, it's there. Bitcoin's the killer app. What we need to do is every person in this room, you know, go talk to 10 people a month and get them on Coinbase or Metal or whatever other payment platform and get them using it. That's the way we get mass adoption. I mean, at least the next phase of adoption. And then all the other use cases that are going to creep up in the background and become more prominent, that's where that comes over time. But I think we've got to start with what we've already got, and we've got enough, I think, as a starting point.
Well, and the industry was growing slowly and organically, but what kind of just was the rocket ship, all of a sudden, everybody and their mother and their next door neighbor was making money trading or buying Bitcoin.
Yeah.
And the message got out a little too early. It's like a marketing message that all of a sudden the whole world knows about. You're like, ooh, well, we're really not ready. And that kind of hurt us in some way because, you know, people have gone and they've lost money, and that creates the, you know, the fear, uncertainty, and doubt for the mass market. But, you know, for the mom and pop, it's a little too early still. I mean, we're still building the ecosystem. So it's very, very important for all of us to stay on message of what is the ultimate goal and what are we here to build and how do we plug those gaps? What are those inherent risks? Because the number one risk right now without developers is stagnating the entire ecosystem and then having sector implosion.
What is the ultimate goal?
I mean, to me, is actually build a real ecosystem on top of blockchain and understand what are those use cases that are viable that are just not CryptoKitties.
I mean, I have an answer for your question. I think that just like you brought up Medici before, you know, that double entry accounting eliminated an entire class of fraud. Now, obviously, it didn't solve all fraud, but you know, some people have called blockchain triple entry accounting, and to me, it's going to eliminate an entire class of fraud. It's just going to be something like, you know, like a polio or something that we have a vaccine for and that you don't have to worry about anymore. But you know, you talked about how is this different from the internet? I mean, you know, 100 years ago we didn't have computers, but there's still an analogy further back, and I think that's the printing press. And you know, the printing press was invented, and it was not something that the Catholic Church wanted to happen. And it also you know, enabled a lot of people to write a lot of shitty books. Right? I mean, it was like, now you can be your own author, right? But it also
the original medium.
Right, right. But at the same time, it also created a basis for creating like national identities that didn't even exist, right? I mean, now that if we all are reading the same books, we can all synchronize around the same language. We can start to think of ourselves as English people or Italian people or wherever you're from. And so you know, likewise, there's, you know, just like the internet made everyone can be their own you know, reporter and tell everyone, you know, what's going on with them. I think now everyone can be their own financier. We can start our own cryptocurrency in like 15 minutes if you want. I mean, you know.
Let's do it.
You can.
The mass adoption panel currency. I'm in.
You know, one of the things there's no developers. One of the things I find interesting
ahead,
right
John.
now is the fact that you have entities like Malta, in like Mauritius, Bermuda, that are now, it's commonplace to talk about these. And these are entities that literally would never have seen the light of day for any technology, but it's their time because of how can you be an early adopter? I mean, I was one of the first buyers of a Segway back in the day. It was, after I landed on someone's front lawn on an accident, I learned that may not be the right decision. But again, the early adopters, and you see these countries, which is really, really interesting because you have Estonia, you have Malta, now they're driving legislation that are now pivoting, and now, you know, France is playing catch up. Germany's playing catch up. Everybody's now listening. So I think it's actually helped us because they think it's their time to shine. And where blockchain's giving people a point that, you know, they have a foot in the door.
So we have around 2 minutes. I want to get a couple of things out there. if we can, and on time. Just quickly, what's going to come first? And we'll go down the panel, enterprise or consumer adoption?
We'll start with Chris, since I always jump in.
Oh, you want some time to think?
I'll go. No, so I'll plug the hell out of my company. So,
Two choices.
Enterprise
He
all
just
day
wanted to
long.
close it out. He's the clock. He
choices.
wants to get the last play.
Enterprise all day long. I mean,
Enterprise.
For us, I mean, we work with some of the largest brands in the world, and their consumer bases, they already have the reach, they already have the access, they already have the distribution. So when we crypto enable their ecosystem, you turn go immediately. You don't have to grow, because really everything's a network effect, right? If you join something and there's 10 people on Facebook, you're like, this sucks, this is boring. But if you can just, and again, if you don't have to educate people, you don't have to adopt them, and enterprises already have that code cracked, and they're already kind of teed up for reach and distribution, and so that's where we're starting, hands down.
Well, I guess I'm next. I think that it actually might be consumers. Of course, I don't know a crystal ball, but I think a combination of, there's going to be economic crises where people are going to be forced to use it because it's a difference between being able to eat and run your business or not. And I think also there's going to be, countries that are much more tech savvy or even tech fetishist, and they want to pay with everything on their phones. And so yeah, I think it could come from the bottom up.
To me, it's enterprise all day long. I mean, we have such a pent-up demand for our training for the professional executive education side, from like the PwCs and the McKinseys of the world, because everybody's going in. And it goes back to the point is that what's the rounding error? If IBM falls behind, what's their rounding error? Will they spend $5 million, $50 million not to? Oracle, you look at Salesforce, all these companies, they're in the game because they don't know what the game is yet. None of us know what the game is yet, but what's that rounding error? In consumer base is not going to do that rounding error.
I mean, and sorry, I got to go back at you, Chris. That's the problem. Like, if you're using it, whether you're using Metal or Coinbase, guess what? You just played devil's advocate against yourself. That's enterprise. That's not consumer. So that consumer, unless they're magically coding blockchain in their basement and they're just using their own thing to tie into their own public and private keys, you are at the behest of an enterprise.
I guess the house wins.
There you go. It always does.
Technology.
So
if you play long enough.
So unfortunately, I think we have to wrap it up. Thank you guys so much. This was super interesting.
Thank you,
I'd love to keep it going. Maybe another time.
Absolutely.
Thanks, everyone.
Thanks, guys.
Thank you.